Greetings to everyone. So I'm going to be analyzing British pound, Australian dollar on the daily time frame. So let me see British pound, Australian dollar on the daily time frame. Okay, now let us go to the left and identify some price action that occurred. So now here I'm seeing a demand zone that got respected. So now here we had a rally, base rally, right there. Rally, base, rally. Now that demand zone there, the rally, base rally, when price returned to it. So now price basically came under a compression. So here we had a compression. So price compressed up to this demand zone, rally, base rally, and then a reversal was triggered. So price reversed. Now here we have what we call a QML right there. So this QML here, this QML level, it's an inverted QML. So the inverted QML caused a reaction to occur. Price just continued going up. It continued rallying, as you can all see. So down here I have what we call a QML. That's a QML right there. An inverted QML. Okay. Now let us just so I think we understood what has happened here. So I'm just going to remove all this because you know what happened here. We had a rally base rally, so price compressed to the rally base rally and reversed. Then again price reversed and tested the QML level and continued going up. So now here the most important piece of price action is this level here. This point here. This point is what we call a support point. So let me just identify it. Let me just keep it like that. So now here we have what we call a support level that was created right here. That's our support level. Now notice what happened to the right. When price returned to this support level, guess what happened? We had what we call a clean breakout. Price broke this support level. So now here we have what we call a clean breakout right there. That's a very, very powerful decision point. So here we had a clean breakout. A very clean breakout. Right there. So there we had a clean breakout because our price broke our support level here, marked by this arrow here. right there. So this support level got broken right here. So now meaning this level qualifies to become a possible support, resistance, flip in the future. So when price returns to this broken level, we shall expect a flip, a support, resistance, flip. Now this level here that got broken, a decision point was formed there, and the decision point we have there is what we call a drop, base drop, which is a valid supply zone. So let me just mark that. So that's our decision point right there. So now there we have a drop, base, drop, a very powerful decision point. So now when price broke that support level, it dropped and then retraced. It retraced and formed a resistance. So let me just mark that point. There's a very beautiful observation here. So now price retraced and formed a resistance. So I'm going to call that R1, resistance 1. So at this resistance point here, retail sell traders entered, and they put their stop losses right above the resistance. So let me just mark that line as red. So now the red line in between there represents the stop losses of the retail traders who entered at resistance 1. So price formed a resistance 1 and dropped, and then again returned to the resistance level, forming what we call R2, resistance 2. Right there. Again at this resistance point R2, most sell retail traders entered and of course put their stop losses right above resistance. Then price dropped a bit, again returned to that same level, forming what we call R3, which is a resistance 3. So again here, retail sale traders are being lured to place their entries, and their stop losses are right above the resistance level. Now this resistance level has lured many retail sale traders to enter the market. So most of their stop losses are right above the resistance, meaning up here we have what we call liquidity. The stop losses of these retail traders has accumulated liquidity right above the resistance level. Now price dropped and then came up, dropped a bit. Now price is going to test this resistance level again. So now majority of the retail sell traders are going to again place their sell limit orders along that resistance level because they imagine that price will respect it again. But now what the institutional traders are seeing, they are seeing liquidity. They've trapped enough liquidity above this resistance level. So now let me just mark this. So now here we have what we call a compression, as you can all see. So prices are basically compressing towards the liquidity. So this is what we call CPLQ. CPLQ stands for compression towards liquidity. So now price is compressing towards liquidity, and the liquidity is composed over the stop losses of the retail sale traders who entered at resistance. So let me just remove that. So now right above here we have what we call a fake out zone. A fake out zone. Now that fake out zone has accumulated liquidity. Right there. So we have a fake out zone containing liquidity of these retail traders who entered at resistance. Now, my anticipation is that price is going to continue compressing. It might drop a bit, then rally and take out all these stocks here. So now here we shall have what we call a fake out. A fake out is going to occur here. So price will fake out, take out all the liquidity, take out all the stop losses, and then react to this supply zone drop, base drop, and then we shall have a major reversal. So now that's an explanation of what the institutional traders are seeing behind the markets. So this is a British pound, Australian on the daily time frame, and this is a very high probability setup. Thank you for watching, and all the best.